Let's discuss PayPal stocks, especially with an important event coming up soon, their earnings report. If we look at the market forecast, which will be adjusted after the report, there's a distribution that seems normal without any unforeseen events. We will also touch on the volatility that is increasing. I'll show you the support and resistance levels. One key point to focus on is the $63 mark, but we'll come back to that a bit later. Let's start from the beginning with PayPal stocks. They have been in consolidation, meaning they've been moving sideways for almost 2 years. This is a long time after a significant drop of 80%. I've shown this chart before, and I suspect this is how it is happening. As we can see, there were 2 peaks. If we look at PayPal, it's the same story. We had a peak in February 2021, then we fell sharply and rose again, just like on this chart. Then we experienced a very serious decline, leading to some kind of culmination. And that culmination indeed occurred on March 10th, 2020. There was a small bounce upwards, and we fell again, continuing to consolidate here. The chart shows the same thing, a long consolidation phase in a state of depression. However, there's a very significant potential for upward movement, my friends. If we look at the earnings reports, we can see that the company is generating more and more profit. For instance, at its peak, the company earned $6 billion, and now it's making almost $8 billion despite the 80% drop. Yes, this might be confusing for some, but such things do happen. You just need to wait. Look at the excitement we had here. There was an incredible movement. Prices soared by 300%. I believe that sooner or later this will happen again. It's just that many ordinary people, investors and traders need to be shaken out. The price dropped. Many started investing, and then it stagnated. You're just being held there, essentially being tested. It's very cleverly designed to wear you down, as this process takes years. It literally takes years. The 4th year of this enormous consolidation is about to start, and people are beginning to despair and sell their shares. Naturally, the stock then starts to rise sharply and returns to its historical highs. In my opinion, such an upward movement is quite likely. Now, let's look at the volatility to see what's happening and when this movement might start. As we can see, the volatility for closer expiration dates is at 25%. I have been following PayPal for a long time, and naturally, its volatility used to be much higher, around 50%. Its standard volatility was between 40% and 50%, which is completely normal. Currently, the average volatility is 25%. Yes, if we look at the options for expiration dates post-earnings reports, the volatility ranges from 36% to 40%. But again, this is primarily due to the earnings report. Once the report is out, the volatility will drop sharply, which is something to keep in mind. What does this indicate? Normally, volatility was 40% to 50%, but during the years of consolidation, naturally, the volatility of this company has decreased and now stands at 25%. This means the spring is compressing. Sooner or later, I believe there will be a volatility release here, and this shouldn't be missed. Now let's look at the Volatility Smile. As we can see, for closer expiration dates and medium-term expiration dates, volatility is directed towards both call options and put options. This means both a decline and an increase in the stock price. This is a normal situation. It is good because investors are considering not only a decline but also a rise in the stock price. Usually the Volatility Smile is skewed towards put options. This is due to the need to hedge accumulated stocks. For investors and traders, buying put options for hedging purposes increase the cost of put options. And on average, put options cost more than call options. This is normal. However, at the moment, we see that call options are also expensive. Again, there are different expiration dates and different information, but on average, this is a very good sign. Now let's look at historical and implied volatility. As we can see, historical volatility is the gray line, and implied volatility is the white line. As we can see, implied volatility is currently slightly above its historical values, but in reality, this is within the margin of error. I wouldn't pay too much attention to this. I am showing you historical volatility because, in fact, you can trade not only stocks but also volatility. In fact, trading volatility is even easier because we have a point to which volatility always returns, and I can show you an example of how this can be done. We assume that volatility, for example, increases by the end of summer, and artificial intelligence itself will build various strategies for us. I remind you that volatility can only be played through the options market, only through the derivatives market. So we're being offered a strategy to buy and sell options with the following strikes: sell a call with a strike of $55, buy a call with a strike of $57.50, buy a call with a strike of $60, and sell a call with a strike of $62.50. This strategy is actually quite complex and requires careful management. It is really aimed at increased volatility. If you do not manage it, you could incur significant losses. Generally, I would not recommend using strategies built with the help of artificial intelligence or bloggers. You need to think for yourself. I'm showing this strategy solely to give you an understanding of how one might trade beyond just the basic asset itself, thus broadening your horizons. Now, Let's look at the trading volume of options, which is also an important aspect. As we can see, there is a very large volume concentrated at the $63 level. This is 7% above the current price. At the moment, it's difficult for me to determine why such a volume is concentrated here. We need to delve deeper and figure it out. There's also a very large volume concentrated at the $50 level, which is quite a low price, but I can understand why such a volume is there because it's the lowest value in recent years. These levels will act as very strong resistance and support. Most likely, PayPal stock will not fall below $50 unless some extreme events occur. But again, $50 is a significant drop of 15%. And we wouldn't want to see that either. We also have substantial resistance levels at $60, $61, and $63. As we can see, $60 is not that high of a level, and we couldn't surpass it even after 3 days of trying. The $60 level is not that significant compared to $63. Now let's look at the open interest. As we can see, the open interest is concentrated at the $140 and $145 levels. There are very large volumes here. It's very interesting what this is all about. Again, $140 is almost a 150% price increase from the current level. Again, we need to delve into this in more detail because nothing happens without reason. Where did this open interest come from? We will need to investigate this further. I speculate that after such a period of consolidation, we could very well rise to $140. Admittedly, this would still be far from the historical maximum, but $140 is still a very significant target. Now let's look at the market forecast and what's happening here. I remind you that the market builds its forecast based on all available information and also applies mathematical log normal distribution. This shows where the stock could potentially go. It doesn't provide guarantees, it simply gives probabilities of where the stock might be. As we can see, the market consensus suggests that the highest probability is between $58 and $60. The market itself cannot determine the exact price at the moment because the earnings report has not yet been published. After the report, new information and results will emerge, which the market will naturally factor in, allowing for more accurate tracking and prediction of price movements. If we look at the market forecast for the end of the year, it's an average range of $55 to $60. So it's actually a similar price range. Now let's return to PayPal stock. I've already shown the chart and I'll show it again. As we can see, we are at the lowest phase, so-called depression. There's a possibility that we already passed this phase at the end of 2023 and are now slowly starting to recover. We can say we're halfway to the beginning of growth. Maybe we'll consolidate for a couple more months, but the potential is significant and present. So we shouldn't forget about the end. And I suggest we look at 3D volatility to see what's happening here. This information covers all the volatility, options, and other data that professionals often use to build their strategies. Now, let's take another look at PayPal. I've already mentioned that I see the potential for upward movement, but I can't predict price movements, and I always emphasize this. My main goal is to manage positions and portfolios effectively, which means building a portfolio in such a way that regardless of where the stock goes, we can make a profit. Now, I'll show you one of the strategies I developed, which consists of options. Let's take a look at how it works. For instance, if the stock rises to $110, though our target is $140, which isn't even shown here, we could make $35,000. If the stock drops to $25, we could make $20,000. Yes, there's a small loss, around $4,000, if the stock stays within certain price ranges. But even this can be mitigated. The essence is to build a strategy so that if the stock starts rising sharply, we can profit, and if it falls significantly, we also start making money. Let me show you how the strategy looks, but I do not recommend opening it under any circumstances. Any strategy needs to be managed. Even the loss we saw can be mitigated. You need to buy options and close them at the right moment, buy new ones, hedge, and purchase the underlying asset. Hedge the underlying asset. In short, it's about competent and complex management. Here, I am merely demonstrating what I do and how I manage my portfolio. It doesn't matter to me where the stock goes. Yes, I believe in the growth of PayPal stock. This stock has potential unless something drastic happens. But again, I can't bet my money on that alone. Do you understand what I mean? I will only invest my money in a way that allows me to profit regardless of where the stock goes. I discussed this in my new portfolio, which I built from scratch. Be sure to check out what I'm doing there. Let's summarize everything that's happening. The first financial indicators show that the company is growing year over year. This is good, as we can see that by all measures, the company is developing very well. The reports are positive. The company has been in a prolonged consolidation for several years. I suggest that sooner or later, new reports will be released and the company will be earning $10 billion and eventually growth will begin. I fully admit that the growth could be very sharp. Again, this is my hypothetical suggestion. But we need to wait for this to happen. I'm not saying this will happen in the next few months or a year or two. It's impossible to predict. We can only watch the options and derivatives market and see what it indicates. If any urgent new information appears, the options and derivatives market will hint at something, and I will definitely record a video about it. I will clearly show it, and we will be able to identify the start of the growth, the starting point. For now, we just continue to observe. I also remind you that I am running a portfolio from scratch. Very soon this week, I will record a new video about which stock I bought and what I'm doing with the portfolio. It's already in full swing, and I am managing it very actively. I am focusing all my attention on it. So subscribe so you don't miss it. Leave your comments. Good luck to everyone.